Markets have been in record territory this week. And of course, they're up today. The Fed suggesting more interest rate cuts are on the way. Let's get more from Sean O'Hara, president of Pacer ETFs. Sean, thanks very much for joining us.
Yeah, good morning. Thanks for having me.
Is the market, are these rate cuts not baked in at this stage? Are they likely, if and when they come, will they really boost stocks further?
Well, yeah, I think they are somewhat baked in. I think that the guidance going forward was really important from yesterday, which is leading to everybody thinking there'll be a couple of more rate cuts. You can't understate the importance, I don't think, of these cuts when you start to think about the overall economy, the consumer, home builders, and commercial real estate in particular. And so I think, when you think about the economy in general, in the United States, the consumer drives everything. Housing's always been a big part of that. I noticed in your previous segment, you were talking about housing in Vancouver, I think. That's the part of the overall market where I think there's going to be the biggest impact. And so I don't think they can be understated. I think that the market has been looking for this and wanting this, and I think needs it. And so I think the Fed starting on this journey of easing is a good thing.
What about earnings? I mean, earnings look okay. We've seen an acceleration. I guess one question is how much of that is dependent on the AI spending frenzy?
Well, you've seen an increase not only in earnings, but in productivity. So the AI spend is really, really important for the tech sector, particularly the component part makers, the software, the hardware, the server manufacturers and things of that nature. When you think about just one particular project, the Meta project in Louisiana, is going to be the size of Manhattan. And then you think about, well, how much stuff has to go into a building the size of Manhattan in order to make it work? So, that's an area of the market where I think there's an enormous opportunity. We saw Oracle, last week was a big winner. You just talked about, I think, CrowdStrike. They provide the internet security. So I think it's a big, big opportunity. There's going to be, in this space, there's going to be spenders and receivers, right? You're going to have folks that are going to invest very, very heavily in building these places out. But they're going to be spending money to make those buildings functional, and that's where all of the component parts come into. So we have an ETF, for example, TRFK, Traffic, that owns, to get in the fund, you have to generate 50% of your revenue from the used transmission, storage, and manipulation of data, which is essentially what AI is. So we're going to be owning those component parts while this is built out. And then the real question then becomes, at the end of the day, do the companies who are going to rely on AI and implement it into their business strategy, are they going to get the productivity gains and the cost savings that they want?
I think we have a chart for TRFK, the Pacer Data and Digital Revolution ETF, and it has been doing okay lately. What are the big holdings in that one?
So you have, Oracle's our number 2 holding. You've got CrowdStrike, Palantir, Palo Alto, a little bit of NVIDIA in there, Intel's in there. You just think about all of the component parts that make a data center work, and that's what you're going to find in this ETF.
You have some stocks for us that you think offer promise. Interested to get your take here on Duolingo, because of course I had some Ukrainian guys doing work in my house the other day. They didn't speak a word of English, but I managed to communicate using Grok AI. So is there not a fear that demand for language training is going to drop off?
It could, or it could continue to evolve. I think that's the open question. So we own Duolingo in an ETF, the ticker's CALG. We screen for free cash flow margin. So free cash flow margin for the listeners and watchers is the free cash flow a company generates divided by its sales. That higher that percentage, the more effective they are in converting their sales into excess profits. And so Duolingo fits into that metric for us. But we have other names in there that, the big challenge to me is that if you look at the overall market, 7 names here in the U.S. are driving everything, but there are many, many names underneath them that don't get that allocation because the broad markets are cap weighted, that are actually doing as well, if not better, and generating as much free cash flow margin or more and growing their sales as fast or faster than names like NVIDIA. So you have Doximity is one of those names, Apple Evan's another one of those names, and so I think that that the individual stocks for us are sort of episodic. We screen every quarter, and so if a business were to deteriorate, they would go and somebody else would come in. But I think you'll see with regard to these large language models and AI, there will be a challenge to somebody like a Doximity, but I think they'll also evolve.
Yeah, AppLovin. I love that name. And of course, they help app developers make money off their products. And you see promise there in AppLovin.
Yeah, it's been a holding for us in CalG from the beginning. It's been a phenomenal stock. Very, very high free cash flow margin. Just got added to the S&P 500, so we owned it 3 years before S&P put it in the S&P 500. And again, their core business model is customer acquisition cost, if you wanted to think about it. So, if you're using apps and you're seeing advertisements, what they're doing is they're helping those advertisers specifically target people based on their usage and their traffic patterns and their search and things of that nature.
And then finally, Doximity, you referred to this. What do they do? Why do you see promise in this name?
So, we take for granted that the internet is ubiquitous here, and it may be ubiquitous in Canada or in the United States, but it may not necessarily be across the globe. And so they're basically trying to make the internet ubiquitous across the globe. And so they've got a lot of opportunity in countries where there's not as much infrastructure in place as we have here in sort of these developed markets.
I'm not sure if you remember the 2007 comedy Superbad, but a character gets fake ID, and of course it's called McLovin.
Yes,
a comedy classic.
Yeah. So I always say that the big indexes don't give enough love to AppLovin because it's such a small weight in these broad indexes. We want to give more love to AppLovin.
Sean, thanks very much. Sean O'Hara, president of Pacer ETFs.